Let's look at the major price movements of EUAs, European Union allowances, in April. If February was a panic month and March was a recovery month, well, April was something a little harder to read as the market was in limbo. EUAs ended the month at 72 €26, which is just a modest gain of under 2% over the month, with no clear direction and prices moving entirely on Iran's ceasefire headlines. While that kind of month is easy to dismiss, we think it deserves a closer look because three things really stand out. First, the Commission's early April communications were generally reassuring, and the reform of the Market Stability Reserve is quite conservative with no structural changes, no nasty surprises. The leaked benchmark update was softer than the industry feared. The message coming out of Brussels is that the July reform will be targeted and measured and definitely not a demolition of the system. So the long-term architecture of the emissions trading scheme is not under threat. The second point, the political risk premium is still here. It's real, it's not going away, at least until July. The market knows this, and it's not pricing any full conviction until we know what the details of the reform proposal are. That's the ceiling. Third, and this is the signal we're watching, short positions from financial investors fell sharply in April, reaching their lowest level since the sell-off began in January. The most aggressive sellers have left the market. The pullback is over. While the market isn't ready to rally, this constitutes a floor to any further drop. For a long-term investor, we have a great combination of low prices, low short interest, improving policy clarity, and historically, that's when interesting points are found. We'll come back with regular updates, and until then, if you have any questions, do reach out.